Good morning, everybody. Friday Focus, Friday the 19th of March. My goodness, how the heck did we get here already? It's not going to be a very long one today because I've got quite a lot of things to do and I'm quite motivated to get on and do them. I'm sorting out all my workflows for my business, which is quite exciting, but also it's quite scary. I'm also trying to put all of my Friday Focus videos onto YouTube. How organized is that? Goodness, who knows? Anyhow, so I hope you're all well. It's a bit grey here today, but at least it's not raining, which is quite nice. What have we got going on this weekend? Lots of nice, exciting things, or nothing happening at all? Are we all just getting ready to get out of lockdown? What's happening? I don't know. Who knows? My daughter's coming home from university on Sunday, which is quite exciting. I obviously saw her last weekend. She wasn't doing terribly well, but she's doing okay now, and it's I'm quite excited that she's coming home for a few weeks, even though she's going to be working solidly and training and doing her studying. But hey, never mind. At least she'll be here. So, what are we talking about today? What's happening today? Well, we're on the 19th of March. We're coming up to very, very close to the end of the tax year. I don't know if any of you saw on my post yesterday on the Facebook page, but I was asking if you had all done everything that you possibly could to reduce your tax liabilities. Is there anything that you can do now in the time that we've got left before the 5th of April to get anything done? So things like your income tax and your NIC allowance, have you taken as much as you possibly can out of that? If you have a limited company, don't forget that you can take the salary out, but you can pop it into your director's loan account. Talk to your accountant about this if you haven't already, if you haven't used up your personal allowance. Otherwise, that £12,500 of tax-free money goes. It's finished. It's over and done with. If you take it out as your last payslip as for March, then you can pop it into your bank account, into your director's loan account as a limited company, and you can take it out how you want to. Then you can draw down on it whenever you want, because basically you will have effectively paid any tax or NI, even though you won't be over that limit. If you are a sole trader, have a look at what your net profit is looking like. Have you used up all that £12,500? Is there anything else that you need to buy, purchases, capital assets, either for a limited company or a sole trader before the end of the tax year? Dividends. If you've got any dividends that you can take out, don't forget you get £2,000 worth of tax-free dividends before you have to pay any tax on them. If you are a lower rate taxpayer, or a basic rate taxpayer, then you're only paying 7.5% on your dividend tax, which is pretty blooming exciting. If you're a higher rate taxpayer, you're still only paying 32.5% as opposed to 40%. So can you take out any dividends? Now, don't forget that dividends are only available if you've got the distributable reserves in your company. If you don't understand what that means, then you need to talk to your accountant and they need to explain it to you, because you cannot take dividends out if you don't have the distributable reserves. It's really, really important. Capital gains tax. Is there anything that you're going to need to declare this tax year? Don't forget, if you have sold a residential property, you have to declare and pay any capital gains tax, within 30 days now. You have a 30-day limit, otherwise you get some massive fine from HMRC, which you don't want. Inheritance tax. Have you done everything that you possibly can for that? For your pensions, have you taken out whatever you can? Don't forget, you get 20% if you are a basic rate taxpayer. You get 20% tax relief on that, so the government pays some of it, which is quite nice. What else could you do? ISAs. Have you got an ISA? If you have, don't forget that you can pay up to, I think it's 20,000. Just over 20,000 now, before the 5th of April, and you don't pay any tax on that at all, which is really good. You do have to declare it on your tax return, but you don't actually have to pay any tax. So remember, the end of the tax year is the 5th of April, so anything that you need to get put through now. So what we're going to talk about today, and please don't forget to press click the StreamYard button. Let me know you're there so that I can see your comments and see who you are. Today, we're going to talk about what was going to be the top 7 tips for accurate cash flow forecasting, and I've changed it to the 8 top tips because I found another one which I thought was actually really rather important. So why the heck do we have to have a cash flow, and why is it that accountants always talk about cash flows and it sounds so deadly boring? But do you want to know how your business is likely to fare in the future? Because if you do, then you're going to need a cash flow forecast. Now, in my opinion, and it's not in everybody's opinions, but it is in my opinion, 99% of your accounting should be looking forward. If we continue to look backwards at what's already happened, then we're never going to be able to look ahead and plan for what we want to happen. If we can put these action plans into place and work out, reverse engineer exactly what we're going to need in order to be able to, say we want to increase our profit by 20% next year, our operating profit by 20%. So what does that look like? You can put these figures into a cash flow. Now, if you've got a certain piece of software, like I have, you can plug these figures in and you can reverse engineer what you need to be earning on a monthly basis in order to be able to hit those targets. Isn't that great? Isn't that crucial? Don't you want to know that on your business? I do, personally. So what would you do? How would you do this? How do you do forecasting? Is it simple? Is it difficult? Does your accountant have to do it? No, your accountant does not have to do it. It helps if you've got somebody else doing it with you. So if you've got a team player who works with you, or another director, or your partner, or whatever it happens to be, then go through the forecasting with them. If your accountant does it or will do it with you, then fine. Use them to do it, for goodness sake, because that's what we're here for. That's what we want to help you do, is increase your profit, and therefore we'll pay you what you deserve, because it's so important. So forecasting your company's cash flow helps minimize potential risks and can indicate if the company is in a position to grow. So proper cash flow management is absolutely crucial for any business, but monitoring all that money that's coming and going, and it doesn't always give you the vital information that you need to make those accurate predictions. So what would I suggest are the top 8 tips for running an accurate cash flow forecasting? 1, estimate your future sales. Now, this is only going to be an estimate. We haven't got a crystal ball, but this is going to be, when we reverse engineer everything, this is going to be what we are wanting our sales to be, our revenue to be. So to improve that accuracy, the estimate should depend on 4 factors. 1, the market share that you have in that business, in that sector. The resources that you have in order to do that. So for instance, you're setting up a new group coaching program that starts in 2 months' time. So the money from that is going to start to come in 2 months' time, and then it's going to stop. It's a 3-month group coaching program, but you're going to be running it again 6 months later. So the money is going to be coming back in again 6 months later. So you need to work all of these things out. Your competition, what competition have you got? And your pricing is absolutely crucial, obviously. Tip number 2 is estimate your profit and loss. So after your sales projections, you need to factor in the projected cost. So this will give you more information about your actual profitability. Of course, you have to know both the expected revenue and the cost of sales in order to be estimate. Oh my goodness, sorry, I can't speak. I'm talking too fast now. You have to be able to know what both your expected revenue and your expected cost of sales are in order to be able to estimate what your projected gross profit and your net profits are. Monthly, this is tip number 3, monthly, you need to perform sales estimates. Some businesses don't turn out enough data in order to be able to do this, but some do, and it depends on what your volume of sales is, basically. So if you're only making 3 or 4 sales a month, then obviously you're not going to be able to do this. But if you're making 2,000 sales a month, then you are going to be able to do this. And sometimes it's quite difficult because customers delay payments. But I think these days, so many people are paying online that they're actually paying at the time that your product or your service is actually being used. Like, I charge all of my clients on a monthly basis, so I know exactly how much money is going to be coming in each month, on the condition that they pay, obviously. And if you're selling a course or something like that, you're obviously going to be selling it online. So people are going to be buying it, paying for it on at the time by Stripe or PayPal or SagePay or whatever it happens to be. But that's why it's really important to stick to your monthly estimates when you're considering your cash flow forecast. So tip number 4 is include your payments due. Now, that's not just payments that are due to you, that's payments that are due out as well. So if you're VAT registered, make sure that on a quarterly basis, you work out exactly, well, not exactly, but roughly speaking, what your VAT is likely to be and when you've got to pay for it. Because if your end of VAT quarter is the end of March, you won't be paying that until the 10th of June, which is great in a way, but it's no good working it out that you'll be paying that in March, because you won't be paying it until the beginning of June. So you need to make sure it's in the cash flow forecast in the right place and the right time. Think about the other payments that are due. So not only have you got VAT taxes, you've got PAYE taxes, which are always due on the 19th of the month after that particular month. Sorry. Interest rates on loans, very important. Now, if you've got a bounce back loan that you might have taken out at the beginning of COVID, or when bounce back loans first came out, you're going to have to start paying for those, or pay it back, or extend it. There's a lot of extensions going on at the moment, a lot of extensions, but you do need to get in touch with your bank. If they haven't been in touch with you already, I would contact them if I was you. Things like utilities. Don't forget that utilities almost always invoice you every 3 months these days. I don't know quite why they do, but they do. It seems very peculiar, but still. Tip number 5 is to compare it with your current cash flow. One of the causes of inaccurate forecasting is unrealistic expectations. Now, when you're doing your cash flow, I think it's really important to have your expectations, so your cash flow figures in one column for each month, and your actuals next door to it, so that you can then actually compare the two and work out what the variance is. That might sound a little bit too technical. Contact me if you would like a copy of my very basic spreadsheet. It is a very, very basic cash flow spreadsheet, but it just might give you an idea. Alternatively, anybody who is working with me, you have the option now of signing up for the Clarity spreadsheets as well. Well, it's not a spreadsheet, it's understanding your 7 numbers, and it's also we set up a financial plan. So we set up a goal. We look at where your numbers want to be. So say, as I say, you want to increase your operating profit by 20%. We work out your action plan on how you're going to do it and keep you accountable to it. Bad luck. And then we look at the financial plan. So we've reverse engineered it exactly to work out exactly what your revenue needs to be in order to get to that particular operating profit. And it looks at all of the cost of sales. It looks at all of your other expenditure overheads and increases those accordingly, depending on how it is that you're wanting to do that. So any of my clients who are watching this who might want to do that, then please do contact me, because that is a service I am now offering. In fact, I'm offering it actually from the 1st of April, but to my current clients, I will offer it now. So comparing with your current cash flow is absolutely crucial. Make consistent predictions. Things change all the time. Sorry, this is tip number 6. Doing a cash flow forecast once isn't going to give you a particular degree of accuracy, but keeping it up to date on a monthly basis is really, really going to help you. And I think it's honestly one of the best ways to improve your understanding of how your business works and what those numbers actually mean. Tip number 7 is accounting for variable costs. Oh, wow, this is huge. This is really, really huge. What are your variable costs? So your fixed costs are the things which are obviously fixed. Your variable costs, which are the things which change depending on how much your revenue is. So if you've got a course that you're putting out there, for instance, an online course that you're putting out there, all the work's already done, absolutely fine. You just decide to sell it again. It's an evergreen course, done, dusted, sorted. That is not going to increase your variable costs. It's going to increase your revenue, but not your variable costs. If you're putting out a new course, for instance, you've got to do all of that work toward it. So your variable costs are going to change according to the amount of revenue that you've got. If you're selling products of any sort, if you start selling a new product line or something like that, then in order to be able to sell that product, you've got to buy the product in, and you've got to be able to market it, etc. So therefore, your variable costs are going to increase. So keeping an eye on your variable cost is absolutely crucial. So you just need to think about what those are, and it's absolutely critical to allow some sort of wiggle room, as we call it, for the variable costs. And they're the ones that are going to vary on a month-to-month basis. So not only those cost of sales ones you've got your utility costs, you've got your phone bills, things like that. Your rent's not going to change, that's a fixed cost. Your council tax, rent, whatever it happens to be, is not going to change, that's a fixed cost. But the other things, they are going to. And the eighth one is accuracy. It comes from good data. If you are working on a spreadsheet that you've set up, and I'm not saying that your spreadsheets aren't good, because I'm sure they all are, but if you're working out from a spreadsheet, then you're not going to be working on the best data. If you are working from Xero, Free Agent, QBO, something like that, you're going to be working on actual data, realistic data. And if you can work on that, then your accuracy is going to be tenfold, 20-fold, maybe, who knows. But in order to do that, the data has got to be correct in those particular cloud accounting systems. So you need to make sure that the data that you are putting in there is correct. Now, again, something that we've started offering is we work with a company called Xavier. Actually, they're called Dexter Precision now. I don't know why. And what we do is we do a checkup on your company, a health check on your company, to see exactly where you are, to see what duplicated items you've got, what double-coded items you've got, what's not looking right, what is looking right, etc., etc., what your corporation tax is likely to be, what your VAT is likely to be, whether the PAYE is being done properly. And it goes through a full health check, and we are offering that now to anybody. No, they don't have to even be a client. They have to be on Xero, but they don't have to actually be a client. We're offering this to anybody for quite a small fee, actually, considering it takes us a good couple of hours. But we then report to you exactly what needs to be updated, what needs to be changed, what's been duplicated, and it gives you full details so that you can go through it yourself and work it out. It's a really, really amazing piece of software, which we've now got hold of, and it is going to make such a huge difference to the amount of time that people take to go through their Xero account. Anyhow, so anybody who is interested, please put hello, Denise, how lovely to see you. You won't like to know about cash flow forecasts at all, I know you. But anybody who is using Xero who would like to have this health check, pop, if you're not watching it live, then put hashtag replay and health check, and I will message you. And anybody who is a client of mine who would like, one, the health check, but two, more importantly, the financial plan to work out how to increase our profits, etc., then please do get in touch with me and I will talk to you about it. I will see you next week all, and thank you so much for being here. Speak to you soon. Bye.